Donald Trump has rattled the entire world with his announcements last week. Some countries have gone on to reciprocate with reciprocal tariffs.
What happens when you tariff the whole world? Simple, the world hits back.
Some have taken their tariffs on American products to zero.
Vietnam wants to cut their tariffs down to zero if they are able to make an agreement with the US.
JP Morgan has raised the probability of a recession to 60%, and the global stock markets are tumbling down.
Today, Wall Street experienced the worst day since 2020.
But what is really going on? What is his strategy? And is all of this a part of a bigger plan? In this video, I'll share exactly that. My thoughts on his plan and the possible implications of that, particularly on India. So without wasting any time, let's get started. Firstly, what are tariffs? Tariffs are basically taxes that are charged on goods imported from other countries. So reciprocal tariffs are you charging tariffs to a country because that country is charging tariffs to you as well. And Donald Trump had been talking about this for a while now.
Reciprocal, that means they do it to us and we do it to them.
He has been saying that we will charge them what they charge us. And that is exactly what everybody was expecting on the 2nd of April. But his announcements came as a surprise to almost everyone.
The way they calculated this just simply doesn't make any sense.
The reciprocal tariffs that he talked about were wildly higher than what any country is charging the US. The US trade representative later as well confirmed this by sharing that reciprocal tariffs were calculated as the tariff rate necessary to balance bilateral trade deficits between the US and the other trading partners. The tariffs that Donald Trump talked about that day were basically US trade deficits as a percentage of US imports from that particular country. For instance, the total bilateral trade between India and the US sits at approximately $120 billion. US imports goods worth $87 billion from India, and the total trade deficit that US has and the trade surplus that India has is $46 billion. So 46 divided by 87 is 0.52, which is 52%. And he went on to call his discounted reciprocal tariffs as 26%, which is exactly half of that. He has done the same with almost every other country, and as you can say from this has nothing to do with reciprocal tariffs. In fact, it has a lot to do with trade deficits and not tariffs at all. Everyone is already pondering about the potential implications of this and how drastically it could impact the global economy, affecting companies around the world and leading to layoffs and a possibility of a recession. So why is he doing it? Has he just lost it? Has he just gone mad? Absolutely not. I think that the answer to what he is doing and why he is doing what he is doing lies in his book, Art of the Deal, written in 1987. In every major deal, be it a real estate deal or diplomacy, the idea is to start with a ridiculous ask. Why? Because the very high tariffs aren't the real aim. The aim is to open the table for negotiation, have countries offer concessions, and build leverage. The tariffs that he has proposed are just a bargaining chip, not the end game. And you can already see it working. Several countries like Israel and Vietnam have already started talks of dropping all tariffs on US based goods. India seems to be on the list of countries with whom discussions are going on as well. By the way, this is also not the first time that we're seeing this. We also saw something very similar in his first term during 2018 trade war with China. He initially started by imposing a 25% tariff on Chinese goods worth $250 billion. While this did hurt the stock markets and businesses in the short term, trade negotiations are exactly what followed. And I really believe that something very similar would happen this time as well. And as a result of all of this, the US will basically end up getting better trade deals than they had before. Further, if you really want to understand his intentions and what is probably going on in his mind, you should download Truth Social, which is his own social media app. He's very active on it and you will find very interesting things, as I found. On Truth Social, he recently shared the link of someone who is saying how Donald Trump is purposely crashing the US stock markets. Here is the game. A crash in the US stock markets will lead to investors taking their money and putting it into treasuries, which are basically the safest form of investment. These investments in treasuries will take up the price of bonds and in turn reduce yields. Fed will drop interest rates as well, and overall US debt payments will decline. On top of this, with all the tax tariffs that the US government will correct, they will go ahead and give tax cuts to businesses and individuals. But who knows? Regardless, we could see a lot of negotiations and talks happening over the next few weeks. Anyway, what are going to be the possible implications of this trade war and who's going to benefit? Well, one large country that in my opinion would be the least impacted and perhaps would even benefit from this is of course India. Firstly, because India is largely a domestic facing market. Most of our GDP is dependent on domestic consumption and not really exports. Further, even when it comes to exports, our biggest exports are services, particularly the IT industry and the BPO industry. And all of these tariffs are just gonna impact goods because that is exactly what the intention of Donald Trump is. He wants to re-industrialize the US, make it the manufacturing hub once again. Why though? Because that's where jobs are and that is precisely where his voter base is as well. So India largely, in my opinion, apart from a few sectors like specialty chemicals and auto components, is gonna be safe. Even if we look at it purely in terms of numbers, it is really fascinating. India's GDP is $4 trillion. 60% of this is domestic consumption. 14% of our GDP or $560 billion comes from exports. Of this $560 billion, only $80 billion comes from exports to the US. And since IT and pharma are exempted so far, this figure comes down to $40 billion. So a 26% tariff on $40 billion is just about $10 billion. So that would be the total size of impact on India. On the plus side, a lot of countries in the EU and China are now looking to strengthen their trade relationships with other countries in the face of this chaos. India is set to benefit from this as well. Now, I genuinely believe that India will prosper in this time of rather uncertainty. And I've shared this with a couple of my friends and they did end up saying that how can India really prosper when the rest of the world is struggling? And probably a lot of you have this question as well. And to all of you, I would just say, look at Japan in the 1970s. When the entire world struggled, Japan prospered. So who is to say that we this time can't be in the same position? Further, who is to say that the world is really gonna be a struggling place and not just a negotiation table with multiple trade deals going on simultaneously? I hope you enjoyed this video and found it useful. And as always, thank you so much for watching and I hope to see you again soon.